Hello friends, this video is dedicated to mutual funds and Zerodha Coin. So Zerodha Coin is a very innovative platform which allows you to invest in direct as well as regular schemes. Okay, so let's get started. So just log into coin.zerodha.com. Okay, to explore the features you can just click on explore all mutual funds. You'll get all the mutual funds which are there, and there's some information here which I'm going to explain later regarding direct mutual funds and yeah about the fees, which also I'll explain later. So yeah, so for logging in, just click on login. For this you need to have a Zerodha account. That means you have to have a Zerodha trading and demat account for this. If you do not have an account, you need to click on just sign up, or you can just fill up the Google form that I have mentioned in the box below in the video, and then click on the, if at all you have ID, just click DN, the client ID and log in. Okay, I'm just trying to log in again. So when I just log in, I'll find all the details here. Okay, so these are the funds that I've invested in, and order history, and SIP conditional, all these features I'll find. But according to me, this is a very unique idea that the Zerodha mutual fund platform has, and I'll explain in a little while what is the difference. Okay, so just a few words about mutual funds, why you should invest in mutual funds. So say you're a beginner, okay, and you do not know which stock to buy or which stock to sell. So what you can do is you can invest in mutual funds. The reason is that these are all professionally managed schemes, in which there's a fund manager who is actually investing on your behalf, either in the markets, in the stock market, or in the bond markets, or some other instruments. Normally, the equity funds are the ones which have higher returns as well as risk, whereas the schemes which are into bonds will give you a stable reward and stable, and the risk also associated with that is much lesser. Okay, so this is the difference. This is why you should invest in mutual fund. And one more reason is that there is an array of stocks that the fund manager may invest in. He may not be investing in one particular stock, right? So that is the advantage that you have. The risk is actually distributed across different stocks or different sectors. Okay, so the next thing is the special features of this particular platform. If at all you have come across some mutual fund platforms, like whatever the schemes, like Reliance Mutual Fund, or HDFC Mutual Fund, or DSP, any of these mutual funds, uh, the thing with these mutual funds, if you go for the SIPs, systematic investment plan, is that you have to give a ECS. That means electronic clearing service. You have to give a standing instruction from your bank, which is linked to that particular uh, direct mutual fund scheme if you're investing through their website. But when it comes to Zerodha, what happens is, you don't have to give any ECS. That is, you don't have to give any electronic clearing service form if you want to invest through Zerodha's mutual fund platform, which is Coin. So what happens here is you can just deposit money. Click on the deposit money option. What you can do is click on add funds. It'll direct to the gateway, and from there you can add funds, and there's a small cost. I think about 10 rupees will be debited for the Atom gateway, or you can transfer the funds to the account through NEFT or RTGS. Okay, and that fund you can use for investing in mutual funds. So first advantage that you have with the Zerodha's mutual fund is you don't have to give any ECS or standing instructions from your bank which is linked. And one more advantage that you have is you can start and pause the SIP whenever you want. What I'm saying is, say I have gone for a SIP of 5,000 rupees every month. So I've started in March 2017. I have, say this one, Reliance Money Manager Fund. I have taken a SIP of 5,000 rupees. I've started in March. The units of March has been allocated. Again, some more units have been bought in April. Same thing happened in May. But June, what happened was there was some urgent requirement because of which I am not able to invest this month. If at all this thing happens with respect to the schemes, when you buy from Reliance or HDFC directly, what happens is there will be a the bank will charge you some amount because you don't have funds in the bank account, and there is a request for the debit of 5,000 rupees. So the bank will charge you some penalty for that. But in case of the coin platform, what happens is if at all you find that you are not able to meet the financial requirements for buying the schemes, what you can do is you can just uh, you can just pause the mutual fund scheme. I have just started the mutual fund scheme now. You can see the SIP as active. If at all you do not have enough balance in the account, you can just click on pause. What it does is for this particular month the SIP is not debited. So this is one advantage that you have. One more advantage that you have is you can edit the SIP the way you want very easily. You don't have to do so many other things. Like what I'm saying is, if you were to do the similar process of editing the frequency of the SIP or editing the amount of the SIP with other mutual fund platforms, you will have to delete the existing SIP and register a new SIP. Normally registering the SIP with these mutual fund houses may take up to a week or 15 days minimum. So by that time you may be skipping the corresponding price of your scheme, or you may be missing the best price that you would have got the SIP at. So this is a very good feature. I'll just show you how to edit the SIP. Just click on the edit button here. Frequency you can change monthly to 15 days, or you can change it from every 10th or every 15th. You can change it, and installment amount also I can change. So I have opted for 1,000. I can make it 1,100 or 1,220, whatever amount I can make, and update SIP. It says here it has to be multiples of 1,000, so just make it 2,000. This may vary from scheme to scheme. Okay, just click on update SIP, confirm and modify SIP dashboard. And one more advantage you have is whatever mutual funds that you buy here, okay, you can cross these mutual fund schemes are created to the your Demat account. So what happens is you are buying these schemes in a Demat form. So you can just log into CDSL EASI in the website, and you can also check your number of units that you have in that particular scheme. So you can just register for CDSL EASI here, and once the units are allocated, you will get the units in the Demat account as well in CDSL. Okay, after taking all these precautions, still say you do not have the required money for the investment purpose today, and today is your SIP day. What you can there's no harm, there's no penalty charged by the mutual fund platform at all. What happens is you will get a message or an email saying that your mutual fund SIP order has been rejected because of insufficient funds. If at all something similar happens, if you buy the schemes directly from the mutual fund website, then there may be a penalty charged. Okay, so these are all the advantages that you have with respect to coin. And one more advantage that you have is, it's a very important advantage that Zerodha coin has, is about that fact that it allows you to buy and redeem regular and direct, both type of schemes. Okay, so I'll just explain what does a regular scheme mean and what does a direct fund mean, direct scheme or direct fund mean. Say there is a just a minute, give me a minute please. So there is DSP, BlackRock, um, Tiger fund. Okay, say this is the fund or this is the scheme. So what happens is, there is a regular scheme in this and there is a direct scheme. Almost all the schemes will have a regular plan and a direct plan. So regular plan means that the mutual fund house, which is DSP BlackRock, is actually allowing the investment of these units through a third party, which is a distributor. The distributor can be anyone. It can be a broking house, it can be a bank. For example, this particular scheme is distributed through HDFC Bank or say ICICI Direct, who are all stockbrokers, right? So in this case, what happens is, since the distribution of these schemes are done by a distributor or a third party, the fund house or the mutual fund uh, scheme has to give a commission to the distributor. In this case, the commission is paid to say HDFC Bank or ICICI Direct. Okay, so this is the commission. So what happens is, they this particular expense that the mutual fund house pays to the distributor is reflected in the NAV. Okay, so this will be more evident when you're doing SIPs, because the power of compounding, you may have heard of the word power of compounding, right? So when the when your investment is under compounding process, since the expense is higher with respect to a regular fund, the returns will be lesser in a regular fund compared to a direct fund. In direct fund, what happens is, or direct scheme, what happens is, the DSP BlackRock Tiger fund is distributed by the mutual fund house itself. So if you're logging into DSP BlackRock website and purchasing the scheme directly from their website, then that is a direct scheme. But if at all you're buying the scheme through a distributor, like any of the brokers or any of the banks who also have a broking wing, then that is a regular scheme. So I'm just taking an example. Maybe this particular scheme has it is not exact figures. I'm just giving some approximate data. Maybe I'm wrong with this. Say I'm just taking an example of regular scheme will have expense ratio of 2.2%, whereas direct scheme will have a 1.1% or 1.2%. You may just Google and find out the exact figures. Okay, so you can just find out the difference between the regular and direct scheme by googling the details. So over a period of say 15 years, the difference that you're gaining is huge, especially when your SIP amount is more than say 10,000 or around 6,000, 7,000. If it is more than that, then the returns that a regular fund gives in the span of 15 years and a direct scheme in the span of 15 years is huge. Okay, so what I'm going to do now is, there is an explanation given about this in trading Q&A on this. It's a very good explanation given. Let's just check it. Okay, so returns. So what I'm going to do is mutual fund returns in coin by trading Q&A. Okay, so the explanation is given here about the returns that you would be getting with respect to uh, direct fund and regular fund. Okay, please google this, you'll be able to find all the information that is required. All right, so you can cross verify with any website, you'll be finding the same information. Okay, so for that purpose I'm just if at all you have invested in mutual funds, you know that Value Research is one of the best websites which is giving you the information about various mutual funds. So I'm just going to explain through Value Research the kind of returns, that the difference in returns that you would be getting with respect to your direct scheme as well as a regular scheme. Okay, so I'm just going to google.com and will type top ELSS uh, funds Value Research. Okay, so I think this particular third link, I'm just going to click this link and find out if this is the one. No, this is not the link. This first link probably. Yes. Okay, look at this particular research by Value Research Online, in which it says the return of Axis long-term equity. I've just taken ELSS funds example because this is more popular funds or more popular schemes these days, ELSS schemes, right? Because everyone wants to save tax. So look at this. Axis long-term equity fund has given 18.34% returns in 3 years. It's an average return. Similarly, 5-year returns of 24.67%. Okay. Now there is an option here called as show direct plans. Just click on this option. You'll be able to find Axis long-term equity fund. I'm just going to do a snip tool on this so that you can zoom in and find the details easily. Just give me a minute. Okay, so I've just taken a screenshot from the website. It says Axis long-term equity fund, the first line, launched on December 2009, and this is 18.34% is the return. And in case of direct plan and launch date of Jan 2013, the 3-year return is 19.75%. The reason for this is the expense ratio. As I said in the beginning of the video, that expense ratio is the difference that makes in the return of a direct fund and a regular fund. So you can see easily here the expense ratio is 1.97% in case of a regular scheme, whereas it is 1.27% in case of direct scheme. Alright, so this is what we are offering now, that Coin has come up with distribution of direct schemes. Okay, so we have gone away with the commission that Zerodha would get with respect to the commission that it would get by buying regular schemes by introducing direct schemes. So there is a SEBI regulation which has allowed the distributor to sell direct schemes, which is a very good concept, and all the mutual fund investors have to grab this opportunity. The advantage that you would be getting by investing in the coin is that, as I've explained already about the SIP, customized SIP is possible. You can start and stop the SIP whenever you want, and everything happens in a DMAT form. And one more thing is just you can see here DSP BlackRock Tax Saver and Axis Long Term Equity. These are the two schemes I've invested in. So I can do all the analytics, all the profit and loss report by in one platform. That is the advantage that I would be getting, rather than logging into 5 different websites or 10 different websites and getting the information. I will be getting all the information in one platform. This is the main advantage that you would be getting. And also one more advantage is that you can also do the equity investments with the same platform. Okay, So hope all the details are clear with respect to Zero the Coin. You can always post comments, subscribe, like this channel, and also please read the description below for more details. Okay, thanks for watching. Bye.